Welcome to Thoughts on the Market. I'm Chetan, Ahya, Morgan Stanley's chief Asia economist. Today, the possibilities of reciprocal tariffs between the US and Asian economies. It's Tuesday, February 11 at 2 p.m. in Singapore. President Trump's recent tariff actions have already been far more aggressive than in 2018 and 2019. And this time around, multiple trade partners are simultaneously facing broad-based tariffs, and tariffs are coming at a much faster pace. The risk of trade tensions escalating has risen, and the latest developments may have kicked that risk up another notch. The US president is pushing a sweeping tariff of 25% on all foreign steel and aluminum products. Trump has also indicated that he would propose reciprocal tariffs on multiple countries to match the tariffs levied by each country on US imports. This potential reciprocal tariff proposal suggests that Asia ex-China may be more exposed to possible tariff hikes. As of now, Asia's tariffs on US imports are, for the most part, slightly higher than US tariffs on Asian imports. And based on latest available data, 6 economies in Asia do impose higher weighted average tariff on the US than the US does on individual Asia economies. The tariff differentials are most pronounced for India, Thailand, and Korea. These 3 economies may face a risk of a hike in tariffs by 4 to 6 percentage points on a weighted average basis if the US imposes reciprocal tariffs. Individual products may yet face higher tariff rates, but we think overall impact from steel, aluminum, and reciprocal tariffs will be manageable. But look, trade tensions may still rise further given that 7 out of 10 economies with the largest trade surplus with the US are in Asia. Against this backdrop, policymakers may have to look for ways to address the demands from the US administration. For instance, Japan's Prime Minister Ishiba has committed to increasing investment in the US and is looking to raise energy imports from the US. This is seen as a positive step to reduce the US trade deficit with Japan. Meanwhile, ahead of the meeting between President Trump and India's Prime Minister Modi later this week, India has already taken steps to lower tariffs on the US and may propose increase in imports of oil and gas, defense equipment, and aircrafts to narrow its trade surplus with the US. However, as regards China is concerned, the wide scope of issues in the bilateral relationship suggests that US administration would cite a variety of reasons for expanding tariffs. As things stand, China has been the only economy so far where tariff hikes have stayed in place. Indeed, the recent 10% increase in tariffs has already matched the increase in the weighted average tariffs that transpired in 2018 and 2019. And we still expect that tariffs on imports from China will continue to rise over the course of 2025. To sum it up, there has been a constant stream of tariff threats from the US administration. While the direct effect of tariffs appear manageable, the bigger concern for us has been that this policy uncertainty will potentially weigh on corporate sector confidence, capex, and growth cycle. Thanks for listening. If you enjoyed the show, please leave us a review wherever you listen and share thoughts on the market with a friend or a colleague today.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.